to another Millennial in Debt video. This is the first video where I don't have braces. By the time you see this, it will have been a few months, but I'm still excited, just as hyped to tell you. Young thing got her braces off. All right, but why we're here, sis, why we're here is we're going to talk about what would I invest in today if I were a brand new investor, just getting my feet wet, not knowing too much information. What would I do? What would be my game plan? All right, we ready? We got like our football, like the black thing under the eyes. Is that what? Huh? All right. So if you are new to investing, you're probably swimming in a ton of information. It's overwhelming. It's so difficult to understand. And I'm here to clarify that for you. If you're looking for a really great introductory class that's just like basic information, no frills, no bells, no whistles, I urge you to join my How to Invest Your First $100 at the link below. It's gonna be a good time. It is always a good time. We also reached 100,000 followers on Instagram. And if you weren't following, you missed that I was paying people student loans for the month. That's why you really should follow if you're not. I'm just saying, it's a really good time. All right, so let's get all that out of the way. If you are new here, hit the subscription button below and turn on the notification bell so you get that every single time I upload a video. Now, once I started investing at 22 years old at my 403b, I did not know a single thing. And this is why I always recommend that you start off with the retirement employee option, because it helps you get into the investing world without having too much knowledge. What I didn't really like as I learned more about investing is that my 403b didn't give me a lot of different options in order to really accelerate my growth beyond what it already did. It was a great investment tool and I'm so happy that I started when I did, but if I knew back then what I know now, I would have done a couple of different things. So I have a Roth IRA. So my Roth IRA is going to be the, middle point, main point of the conversation. The first thing that I absolutely would invest in is VTI. Why would I invest in VTI? That is because it is a total market index fund. If you are unfamiliar with what an index fund is, you want to think about it as if it is an entire pizza pie, as opposed to buying one slice of pizza, right? So let's say you want to buy Apple stock or Google stock or Facebook stock, whatever it is, that is one slice of pizza. I don't have the risk tolerance to be trying to pick out individual stocks in order to be a millionaire. I like to do the absolute bare minimum when it comes to investing and set that trajectory to hit millionaire status without me having to do a lot. So index funds are definitely the way to go. And because I want to diversify my portfolio, VTI is giving me all of the companies in the stock market in the US. Of course I want that. Of course I want to invest in Meta and Amazon and Google and all things like that without having to break the bank. Now, VTI is one of the more pricier index funds. I believe as of today, it is about $270 a share. The market has been fluctuating like crazy, right? So I don't know what it's going to be by the time you see this, but at $270 a share, that can be really intimidating for someone who's just like, I have $50, I have $100 I want to get into the market. And that's where fractional shares come in. I love fractional shares. Fidelity, I believe Schwab, Vanguard is new to the fractional share game, allow you to put in $20, $25, $10 into a total stock market index fund like VTI without having to put your entire $100 or $270 in to get some skin in the game. Besides VTI, I want to diversify and go into real estate. Do I want to go buy a house and things like that and do all that other stuff? No. Like I said, I like to do the minimum and gain the maximum. So that means I would invest in VNQ. VNQ is what they call a REIT, right? So it's pretty much just a real estate index fund. It is tracking real estate on the market. That has given me exposure to real estate companies that, I'm not going to go individually and invest in because I don't want to have to do that level of research. I just like to see how VNQ has done historically, and then I put my money into it. The next index fund that I absolutely would start out with is an international index fund. Because of course I am in VTI, I'm getting all the stocks in the US. But the US is not the only part of the stock market. It is a big part. It is not the only part. So in order to get a really great full diversified portfolio, I would look into an international index fund. The international index fund that I invest in is VT. It is a total world stock. So comparable to VTI, which is a total stock market fund for the US, VT is all the companies in the world. So as you can see, my investment strategy is do the least, get the most, and diversify as much as possible because my risk tolerance is very low. Another really great step that I would take is to invest in a target date fund. Back in 2010, if I invested in a target date fund, that would have been doing a lot of growth from that time period to now. I'm 33, so 11 years later, right? Showing a lot more growth than when I started much later in the game in my 401k. So now I have a 401k because I have pivoted out of teaching into tech. So I'm in corporate America, and now we no longer are offered a 403b. My 403b has been moved into a traditional IRA, or rolled over, I should say, into a traditional IRA. So if you are leaving any type of employer, this is super important. You want to make sure you take your money with you, right? It doesn't mean take it out because taxes are crazy. Fees are crazy, but it means you roll it over. A really great free service is Capitalize. They do it for free. Free 99, my favorite cost of them all, right? So again, we're going to rewind because I don't want to overwhelm. I would start off with VTI, VNQ, and VT as my 3 index funds to cover total in the US, some real estate, total in the world. And then I would also invest in a target date fund set for probably 2050, which is when I'm looking to traditionally retire, although we know I'm looking to retire tomorrow, right? So a target date fund for the year that I'm looking to retire. If you are unfamiliar with target date funds, I have a specific video outlining that for you, which you can click up here or down there to get all the tea. And you can join me at the How to Invest Your First $100 for more hands-on guidance. I will catch you in the next one. Peace. Bye.